3.
Awesome. Hey guys, my name is Carter.short. I'm with Veterans Association of Real Estate Professionals, also known as VAREP. The nonprofit that I got associated with this, I was in the founding chapter here in San Diego County over the last 4 years. Where I'm at today, I am a licensed loan officer, but what I'm here to do is provide for is about the VA loan. That way our community and yourselves, whether it's for your spouses, children, and what have you, know how to use the VA loan and their home loan benefit for what it is. County loan limit here in San Diego, I'll cover the broad perspective down to the lower, is $612,950. Where that's important is you can buy up to that amount without having to bring any money out of pocket. Now, one of the points I always want to make sure, and I'll touch bases further in this, is closing costs. Closing costs cannot be rolled into the loan. So when you look at a down payment, it all is based on qualifying income and what have you. If we're at a conforming loan limit, because our county touches other counties, and we're looking at Riverside County, San Bernardino, the conforming loan limit would be $424,100 there for you. The workshop as a whole today is paving the path to home ownership. I want to ensure that people know how to use their home loan benefit. Whether it's now, 10 years from now, they can make sure that they understand what are a lot about the VA-ness and how the home loan will work. Current industry situation. People ask me all the time, is now a good time to buy? I'm not a financial planner, and I don't play one on TV. But as a whole, we're at historic lows today. If you looked at what is the nominalized rate of interest rates in the United States over the last 80 years, it's 6%. So if you ask me what's the VA home loan, what would be the interest rate today with good credit, it's hovering right around 4%. It was at about 3.75 about the last 10 days ago, and it's crept up a little bit. It's about 3.875 to 4%. Where if anyone's bought a home in the past or talked to a grandparent or relative, they bought a home in the 80s, it was 18%, perfect credit 15%. So money is very inexpensive to borrow. So as a whole, is now a good time to borrow based on interest rates? The answer I'd say is yes, basically on historic lows.
Does the VA interest rate fluctuate?
It does. So in the way the VA loan works is it's securitized in the Ginnie Mae market, a mortgage-backed securities market. So it trades just very much like the stock market. So in the mortgage-backed securities market, when it's open Monday through Friday, it'll change about every 7 seconds. So I watch the mortgage-backed securities market. So if I have a loan that I need to lock, and I'll get the locks in further detail, it'll fluctuate. You'll watch it trade and what happened. A non-political statement, the day after Donald Trump was elected, we had in about a 3-week term, interest rates at that point for the VA loan with perfect credit, the base rate was 3.25% at the time. It moved to 4% in about 3 weeks. And the reason that happened was not because no one liked Donald Trump or anything like that. It's because the way the securities market works is that when you see something unknown and what have you, there's a lot of different movements. And as we saw the stock market move, money usually floats from the two. They're kind of, if the bond market's doing great, usually the stock market's not, and vice versa. Because most people that invest in bond and treasuries are going to be based on risk assessment. If we see Brexit happen, for instance, with France, and that happens very much like Brexit, we'll see a great movement towards interest rates going down as a whole. And I got off chart on that, but as a whole, it was a great question. Interest rates do move. Who's eligible for a VA loan? Active duty personnel, I kind of talked about this basis earlier, is 90 days. So as long as they have 90 days in service, they're able to have the eligibility to buy a house. Why that's important is from when we were in service, you'll have those guys and gals that are blank hot, we called it another name, that were great service members, and by the time they're in 2 years, they're in E5, some cases are pushing an E6 in their third going in fourth year, and by that are making good income, specifically if they have, if they're married. For what incomes are, they're in a great potential to be able to buy a home. VA approved candidates, this can be, there's other folks that have had military discharge because of medical and what have you. The most important thing that I'll always cover when it comes to finding out if you're eligible to use the VA loan is the certificate of eligibility. Number one thing when anyone you ever discuss, that you talk to, because I've had people that tell me that they can use the VA loan and we pull the certificate, they don't have the option to. So it doesn't happen all that often, but it does happen. And so it's the number one thing that I'll ask that question is, can I use my VA loan? If someone has had a short sale or foreclosure before on a VA loan, they can use it again. It'll give me a dollar amount that is on the certificate that is used of eligibility. So if let's say they had a $100,000 foreclosure, we're doing the county loan limit here in San Diego. So just for easy math, the 613. You minus out $100,000, they could buy a $513,000 home still for zero out of pocket. So again, a lot of the myth is, oh, I lost a house that I had a VA loan, I can't use it again. The answer is no. You can use the VA loan over and over again. It all has to do with that eligibility, and that's why it's so important.
Does losing a home in conventional affect the VA?
So where it would affect, great question, where it would affect is when that time period happened. So in the VA home loan product, there's something called seasoning. From the date that deed of that foreclosure was recorded at the county, you need 2 years to have passed. Once 2 years has passed, the VA will no longer look at that as something that would hold someone back from using the VA loan. Great question for what it is. It's the shortest time period of all of the loan products. Again, the VA loan, by its design, they want veterans and active duty personnel to buy homes. The benefit is designed for them to use it. FHA is 3 years you have to wait. Conventional on a foreclosure is 7 years. So the VA loan is designed, they want people to be able to buy homes, and the way it's designed of. Great question. Now you can also have it for a surviving spouse. So we were talking earlier about folks that had served in the Vietnam era. Unfortunately, there was a lot of those that were around Agent Orange and things like that. If they had that in their service record and they were receiving disability income, let's say, and they passed away from service-connected disability, and the VA has that on record, the living spouse can actually use the VA loan as long as they haven't remarried. So there's a form, again, it all comes down to that certificate. Now there's one added form that goes with it for the spouse to fill out. It takes a little bit longer. It's traditionally about 10 business days or so, but it'll tell us if they are able to use that VA home loan benefit. So it all depends on what it is in those cases.
Is filling this form out or submitting it, obviously it's like a prerequisite, but is it good to have it on hand already, or is it only during
No, you want, I would say, even if your plan is 3 years from now, fill it out. That way you know, great, I can use the VA loan. I know that is all, there's nothing, because if there was let's say the home that was purchased long ago, they didn't restore it correctly, it might take some time
give you that
to get that. If it was
you can repair it.
Exactly. When it comes to the lending aspect, I will always say start sooner rather than later. Because until you know how everything looks, eligibility is a question. Active duty. Sometimes what will happen is when you pull the certificate, it won't pop up. And it's not because the active duty personnel did anything wrong or there was anything negative. It's not showing in the system. So what you have to get from the command is something called a statement of service, or SOS. Once you get that statement of service, they're called a manual order. You put that in with the certificate of eligibility, and you send it into the VA. And then the VA will send in the certificate of eligibility to you. So there's a lot of different ways of, depending on, but almost everything you'll ever hear me talk about is the importance of the certificate of eligibility for what it is. Reservists can use the VA loan, but they have a much longer standpoint. It's 6 years reserves, unless they had been active duty and got kicked to reserves. You see like that in the 90s, where guys were active duty and they were downsizing during the Clinton era, and they had 4 years on active duty, and in the second year they bumped them. I've seen it where they bumped them to reserves. It all comes down to that certificate of eligibility. Everything ties in to what that is as a whole. The VA product overview, there's some great points, and I'll tie into many of them, but the two strongest points are, the first one is there's no down payment. What makes the VA loan so strong to a buyer, to that benefit, is you don't have to bring in funds. Now, can a veteran active duty, if they have funds they want to bring in? Absolutely. But the way the loan is designed is it gives a lot of folks reasons to be able to buy a home. If you look at buying a rental home, you have first month, last month, deposit. And you're talking here in Oceanside, I would figure the average home here rents are probably about $2,400 or so. Just for easy math, let's say it's $25. That's $7,500 that family would need to come in with. Where on the VA loan, it's zero down.
That's a very good point to put
So
on.
it can be, now obviously you want to afford what you can buy, but you look at the VA loan is actually can be cheaper to get into than an apartment or a home, depending on what price point you're buying at. And that's the strength of what the program is, where the zero down comes into play. You can go above the county loan limit. I touched basis on this a little bit earlier ago. Anything above the county loan limit, whether it's in San Diego, Los Angeles, Orange County, you always have to think of the way the VA loan works. Anything above that amount is 25% out of pocket. That's just how the loan works. And basically you're covering the VA guarantee. Earnest money deposit. Now in a VA loan, it is a zero down product. But one thing I always want to make sure is, in most cases, you're still going to have an earnest money deposit. And what that means is you find the home that you want, you write the offer up, and you get accepted. Traditionally, what I see in San Diego County, it's about 1%. So on a $400,000 home, in most cases, they're going to want to see a $4,000 check to open escrow. The benefit of the VA loan is, let's say we get all your closing costs covered in that. You can have that earnest money deposit refunded back to you after escrow, but in most cases, you're still going to need that. Now, can your realtor lower that amount? Absolutely. That's part of the discussion. Hey, my guy's, active duty, or, they're a veteran, they're ready to go. They've gone through all the steps alone. They have $2,000 on that $400,000 home. Do you need to have an earnest money deposit at all? The answer is no. The problem is finding where someone will accept your offer without having any skin in the game. But you don't have to have an EMD in the VA loan, but I like to explain it because a lot of folks will think, hey, I don't need any money. I won't need any money to show. You still may have to show a very small amount for that initial deposit for what it is. Gift funds. So gift funds can be used. So if you were helping a son, a daughter, and what have you, a family member, grandparent, uncle can gift in the funds, can gift a down payment, they can gift closing costs, whatever they want. The nice thing about the way the VA loan is designed, different of FHA, I don't have to show donor capacity of giving. And what I mean by that is, let's say grandpa did really great in life, had a grocery store chain and had $1 million in his account. I don't have to show that bank statement for that account to have the funds gifted over. I could show the check, which will have a checking number and a routing number, because there's a form that they fill out that it's a gift and not a loan. Very important. But in that, if you're looking at an FHA loan, for example, I have to show that full bank statement.
So, for example, if I was looking at a VA loan and I want to get my son to buy with me, and I think you had mentioned if the loan's $400, then we both owe $200, but he has to pay a percentage of that.
Of those funds.
Right.
25%.
Yes.
If I were to gift him,
Yeah, as long as there's funds,
help him.
as long as there's funds there for that side of the coin.
That's excellent.
it would work out.
It's just that you need that monetary basis for that guarantee for the non-veteran.
Just to make it happen, that loan has to have the 25 anyway.
Yeah.
And I don't say it doesn't matter where it comes from, but if I wanted to, it wouldn't matter.
And what I would also look at too is if your qualifying income was based on let's say in your case, let's say your income was high enough to qualify for that $400,000 property. I may not, because if you look at what that money could be doing in difference, again, I'm not a financial planner, but if you could qualify for that home without putting any money down, do it where he's a family member. You can have him where he's added on title. It's just, if you don't have to have him on the loan, if you qualify without the income, why would you want to tie up money? Just as an example, you may end up going that route. Hey, it works better for my payment. Great. But I would sit down with your tax person. I would sit down with your financial planner, because you might tie up $50,000 that you're paying at a 4% rate where, hey, let's look at what this $50,000 could do somewhere else. So again, these are all the talking points that you want to have through when you sit down with your loan officer to ensure that ultimately your strategy is, how do I build wealth and a home for this situation now? So you may think going in that this answer is the best, and as you talk through all the different people that can give you financial information, tax information, that might change. But it's a great point, because what I see sometimes is people have down payment money and they have debt. They have a car payment, they have this, and in a lot of cases, you can't write that car off because they don't use it for their work. So you're going to put money down on a loan when you could pay off the car, the savings based on what that car payment would look like, meaning if you put $30,000 down on a loan, what's that payment drop to paying off a $30,500 payment a month? It's a huge difference. $30,000 will save you $150, $175 a month. So that's where you want to sit down and crunch the numbers to what works. But great point. And that's where it's sitting down and communicating all those points through.
Can we take a break now?
Sure.
Yeah, so then that way we'll stop it.